Hi guys, so we are starting another tutorial here, and I want us today to talk about something to do with the position sizing. So first of all, what is a position size? So a position size is just the units that you are buying. Sorry, the units that you are buying or you are selling while you are in the market, in the trading market. So how do you get to know the unit that you are buying or selling? I'm clearing this chart so that you can get a clean chart that looks understandable. I'm clearing this chart. I'm clearing this chart so that we can have a very clean chart. So I have a video that I created, and I talked about at market order. So today I want to talk about an order called limit orders. Limit order. So I think guys, this chart is it's now clean, and let me start by doing my analysis before I execute that order that I'm talking about, which is a limit order. So how do you execute a limit order? So before you execute a limit order, you need to do your analysis either technically or fundamentally. And when you do your fundamental analysis, as we know very well, we normally base on news. You do a fundamental analysis basing on news. I've never talked about fundamental analysis in any of my videos, but just to let you know what you can do while you are doing your fundamental analysis. You have to have a download. It is just an app. It is called economic calendar app. So when you have that economic calendar app, it will simply do what? Direct you and inform you what is happening currently in the global markets. It will also give you the informations about the current issues that are taking the stage in the political space, guys. So like you have news, like you have some geopolitical news. You can have some geopolitical news, and when you talk about geopolitical news, you very well understand that these are news that are impacting the markets because of political events that are happening somewhere in the world. Let's say for example, guys, we have news like let us assume like currently the news that are dominating the global markets or the trading markets are news to do with the things that are happening in Iran and USA. So currently, US and Iran are currently having some 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 discussions about having permanent ceasefire, guys. And this permanent ceasefire, they're discussing about ending the wars that was started some few months back. So how they will end this war depends with how they reach their peace agreements. How they will end the war depends on how they will reach their peace agreements, guys. So those are basically what we call geopolitical factors. And you can also understand that Israel is also having some issues with the Lebanon, whereby they believe that we have some gangs in Lebanon called Hezbollah. Hezbollah is a gang that is really stressing Israel. So Israel, they're trying their all means to do what? To make sure that they clear out the Hezbollah gang who are who are based in Lebanon. So they are going direct in Lebanon to bomb Lebanon Lebanon so that they can scoop out those Hezbollah characters, right? So, but Lebanon, they're also there's also being they're also being defended by the IRGRC. Those are the Islamic states. Those are the Islamic states like Iran, something like that. So these are the things that are these are the things or the political issues that are really affecting the trading markets, guys. So when you have those issues happening, the market are normally affected, or then they are normally impacted by those issues. Let's say, for example, let us pick the example of Iran and USA. So right now, investors are really fearing to do what? To use what? To use some currencies in their investments, or some goods in their investments, are really fearing to invest in some goods, right? Why? Because they fear that those goods they will lose value, because currently the US dollar is gaining more value over so many currencies, right? The US dollar is gaining value over so many currencies. And which currencies are these? If you hypothetically digest this information, you'll find that wherever you have a US dollar, right, you are likely to use that currency in any market globally. You are likely to use that currency in any market globally. Let's say when you want to buy oil, right? When you if you want to buy oil, oil is bought using a US dollar. Oil is bought using US dollar. So currently, as we have this current of ups and down in Iran, this current war in Iran, right? Though these guys have agreed to reach an agreement that they want to stop that war. But currently, we are having scarcity of oil because the oil that was passing through the Strait of Hormuz, which is a passage that passes almost 20% of oil that is sold globally, has has stopped, right? So if that oil is not passing through the Strait of Hormuz, this means that the countries that were depending on Strait of Hormuz to get the supply of oil, they will have to go to USA and get some oil there, or they go to Canada or other countries, right? So what normally happens is that if the passage of oil has been halted or has been affected in Strait of Hormuz, and the US is selling oil. So this means that the oil that USA is selling will be of a higher price because the supply is small. The supply is small. The supply is small. I think, guys, you understand the logic behind supply and demand. You see, when the demand is high, this means that the supply is low. So this means that the supply of oil right now is deteriorating, if I can use that word. The supply of oil is reducing. Why? Because the oil that used to pass through the Strait of Hormuz has been has been somehow stopped, right? That oil is not passing there right now. Though things are getting better and better, at least because these guys have agreed to sit on a table and discuss about that situation. So my point here is, when you see those kind of scenarios happening, where we have bombs are flying everywhere in the air, and some commodities are not moving, these things, they normally impact the prices directly, right? They normally impact the prices directly. Like I've said that the US dollar will automatically gain more strength against so many currencies or so many goods, because now people are investing in the US dollar, because it's being perceived now as a safe haven asset, right? So people are removing their money from other assets, let's say like gold or Bitcoin, and buying what? And buying the US dollar, so that at the end of this ups and down in the global markets, they have got their currencies with the good value. They will have their currencies back with the good value, right? Guys, you can ask me questions in the comment section, because I'm talking about the fundamentals that are affecting these currencies, uh, that are affecting these currencies directly. So those are the fundamentals that we are doing, what we are having right now, that are affecting our trading markets. So we can also trade basing on those fundamentals. So like you can see that most currencies, most assets, like here the BTC, the price is doing what? The price is getting lower and lower and lower. Why? Because people are preferring to use US dollar as the most appropriate, the most appropriate storage of value, right? The most appropriate storage of value, the storage of value for their money, right? So what I wanted to say here is, what I wanted to talk about in this video is things we call the pending orders, because we are here to trade, right? We are here to trade, and before we trade, we need to know uh, how do we trade, guys? How do we trade? What are you doing in that trade market? Do you know what you're doing in that trade market? So first of all, you need to know how are you buying your positions, right? Or how are you buying that asset that you are interested in? Like right now, you are trading BTC. For example, you're trading BTC. So if you are trading BTC, you'll have to do your analysis. You'll have to do your analysis in a most in a most in a most appropriate manner, guys, right? You'll have to do your analysis in the most appropriate manner. So let me start by doing technical analysis. I've talked about the fundamental analysis, so let me now talk about the technical analysis part. So technically, I say that you needed to know the exact area that you should do it. You should execute your positions. So I'm starting to draw my support areas and my resistance areas. So this is my resistance areas, guys. So that is my resistance areas. So as I draw my resistance areas, I should also draw my support area. So this is my support area. This is my support area. So I will only use those two structure levels. I will only use those two structure levels. So supposedly you wanted to sell in this market. You wanted to sell in this market, and let's say you are not around your computer, or you are not around your phone to trade in that market during a certain time that you felt that price could get in a support area like this one, guys. So what you could have done, you could have set an order called sell limit order. So this sell limit order, you could just come here, because uh, hypothetically, you could have felt that maybe when the price got from here, because this is guys this is a downtrend. This is a downtrend. So for you to identify a downtrend, at least you have to see the price doing what? You have to see the price dropping. So if this is your downtrend, you need to identify your area that you should purchase your position, or the place you should purchase your asset. So in this downtrend, we normally call this an an impulsive move, right? This is an impulsive move. So our impulsive move gets at this area that we are having our support area, which is this structure level. So this structure level is now acting as our our support again. You see, it was a resistance that has stand out to be our support area, because the price has got in that support area. Then I'm seeing at least some two bullish candle. Guys, I say that if for me to identify a pullback, at least I need to see some two candles that have color change, right? Two candles that have changed the colors. You see, at least two candles that have color change. So here I'm seeing two green candles. So these two green candles can at least give me a reason to identify this area as my support area. And if it is my support area, I need to see a pullback. So this is my pullback, right? My pullback has started from my support area. You see, so this means that this price was again rising. The price of this BTC was again rising from this support area up to this area. So if this price was rising, after me seeing that pullback, I could have identified this area as my area of value. I could have identified these areas, guys, as my area of value, right? My area of value. So if this is my area of value, what could I have done, guys? What could I have done? Let me extend these candles. What could I have done? So I could have set my my sell limit at this resistance. This is now my resistance area. So that sell limit, I could have instructed my broker that if the price gets up to this area, you see, because I had a feeling that because of this support area, which was broken by this impulsive move. I was feeling that the price could get up, could do what, could get back in this. Sorry, guys. I was feeling that my feeling was that the price, my price. I was feeling that the price could get into this support area here, which was broken, and when it gets in this support area, the price was could be resisted, guys. The price could be resisted, then drops again. So that was my feeling as a trader. So if that was my feeling as a trader, then I could have set my sell limit there, so that when that price gets in there, my order could be filled. Then I could have gone down with the price, right? I could go down with the price. I could have gone down with the price like this. You see. So if that was my entry, this was my entry, because these are resistance now. So my target price could be down at this area, which could be my my support area, right? My support area, okay. So if that was my support area, then I could have gone to my orders list. I could have tapped that stuff. Then I tap this. This is now my sell limit. Remember, guys, we have different types of orders here. You have buy stop, buy stop limit, and so many, right? So I could have set my sell limit at that area, right? So that I tell my broker that when the price gets in this area, my order should be filled in. My order should be filled in so that I get in the market and sell my assets. So if that is my sell limit, then could have set I could have set my sell limit. So guys, before I do that, I'm doing this because this is a previous this is a previous this is a candle that this is a candlestick chart that was formed when I was not in the this is a candlestick chart that I'm using to do what? To show you an example how I could have set my sell limit, right? So let me get in and identify the price that I could have set to sell. The area that I could have set my price and sell. So I could have got in that area because of this area there, right? So because of this support area. So what is the price there that I could have got in with? The price was guys. The price was 74,000, 74,000, 74,000, 74,366.29, right? That could be my sell limit. That could be that is where I could have set my sell limit. So I could have 74,366. So I could have gone to my order list and fill that fill that fill that order, which is 74,366.27, right? That will be my my entry point. That will be my entry point, my sell limit entry point. Then I could have set my stop loss at 70. Let me set at 75. Remember, guys, a stop loss is an area. A stop loss is an area that you are ready to get out of the market. Suppose your analysis is invalidated. Suppose your analysis is invalidated, right? So that you get out with a small loss, right? With a small loss, right? Because we normally get out of the market when we feel like our analysis has been invalidated. So that's where the stop loss comes in. So that is where our stop loss will be. That's where our stop loss will be. Then our TP, which is our target. Target is where by feel like when the price gets in that area, you are willing to do what? To get out of the market. You are willing to get out of the market. You are willing to get out of the market with some profits. With some profits. Okay. So let me set my TP at because you are selling, the market is dropping. The market is dropping. So let me set my TP at 68, 66.0. So that is my TP. That is my TP. So after we have set our stop loss, then and our TP, you place the trade. Place the trade like that, right? Place the trade like that. All right. So guys, this is where my TP is. This is where my TP is. This is where my TP is. And my stop loss is slightly up. So guys, I'll come back and explain another order for you. Okay, I'll come back and explain another order for you. Right now, let us stop there. But for you to set a stop loss, let us come back for another video, guys. Okay, I'll come back for another video.